What's up, guys? My name is Drew Adams, and today we're going to be talking about how to get started with investing, the absolute beginner guide. Let's get into it. Jumping right in, there is a recent Yahoo Finance article that talks about how 64% of Americans are going to be retiring without enough money. In fact, Yahoo states that about 83% of people will retire with less than $100,000 saved up. This means 83% of people are going to be living below their standard of living upon retirement. Most retirees won't be able to do the same activities they did when they were working. And to give a little backstory about what I used to do for work is I used to work for a financial planning company, and I used to call upwards of 140 people a day, generally talking to about 15 to 20 people every single day. We talked finances. Now, I no longer work in finances, but one of the things that I took away from working there was a severe urgency to plan my finances in a way that sets me up for success in retirement. And I'd like to share the things that I learned over my tenure at the company to help you be able to grow your same success when it comes to finances. And if there's one thing that I really want you to take away when it comes to investing, is that investing is not a rocket science, it's a discipline. And if you're able to gain control over your finances, you can be massively successful when it comes to investing. And you'll be able to retire very comfortably when the time comes for you to take that next step. One of the biggest problems that we have is that we are not taught finances kindergarten through 12th grade. So what happens is we come out of high school and we start taking out debt for college. We go buy a car, we go get a credit card, we do all these things that put us in a position to massively underperform when it comes to investing, budgeting our money, when it comes to being smart financially. And so one of the things I want to do is go over some basic steps so that you'll be able to invest your money and be super successful and have your money work for you in a way that will create success. Now, the very first thing that you need to do before you start investing is I highly recommend that you get an emergency fund. Save $1,000 or 1 month's expenses, whichever is more. Now, you may be asking yourself right now, why is this guy talking to me about an emergency fund? I can't tell you the peace of mind that I have knowing that if my car dies tomorrow, I don't have to scrape my pennies to fix that car. Now, let's just imagine for a minute right now that you don't have savings and your car dies, but at the same time, the stock market plummets into oblivion. The only way for you to fix your car is to pull some of your money out of the investments. But look, that $100 that you put into the stock market has now decreased to $80 in value. So now you pull that money out to fix the car. So now you lost money in the stock market just to fix your car, costing you more than it would have had you just had it in savings. So let's talk another scenario here. Say you have $100 to put into the stock market and it turns to $110. You might be thinking to yourself, hell yeah, I'm up $10. That's going to help fix the car. Wrong. You got to pay taxes on that $10 gain. Just don't do it. Don't pull money out of the stock market just to fix your car. Keep an emergency fund. And the second thing that you need to do is pay off your debt. I'm going to keep this one as simple as possible, as I could talk about for hours how damaging debt is in our lives. But before my wife and I paid off all of our debt, we were paying about $700 a month towards our debts. Now imagine for a minute how powerful and how much money you can earn by investing that $700 a month into the stock market that on average returns about 7 to 10% a year. Compound that over 30 years and you end up with $1.3 million. Now, for the reason all of you came here to begin with is how to invest your money. To make this as simple as possible, I'm going to talk about a very specific type of investing that has been proven to work and to be extremely effective. We're going to be talking about investing into index funds or ETFs that track an index. And so if you're not sure what an index or an ETF is, an index tracks a certain type of sector of the overall stock market, but there are indexes that we've all heard of. For example, some of those indexes is the NASDAQ, the Dow Jones, the S&P 500. But specifically what I'm going to talk about today would be investing into an index that tracks the S&P 500. So the S&P 500 is an index that tracks the 500 largest U.S. publicly traded companies. So here's an example of the top 10 companies inside of the S&P 500. These are companies like Apple, Microsoft, Amazon, Google, Facebook, Tesla, and the list goes on. All of these names are names that we've heard before, and I'm going to leave a link in the description below with all of these companies, a link to this website so that you could come in and look at it and know what you are putting your money into when you invest into the S&P 500. So that is an example of an index. Now, oftentimes with an index, there's a pretty high minimum. Usually it's about $3,000 to be able to invest into an index. There are other ways to get into, be able to invest into these type of investments without that minimum, and that is investing into an ETF. And so an ETF does the same thing. It actually tracks what the index does. And here's an example of one of those. So if you take a look at this chart here, the S&P 500 is shown in yellow, and Vanguard's ETF that tracks the S&P 500 is in blue. It closely follows and tracks what the S&P 500 is doing. It doesn't perfectly align with it because someone is going in and making adjustments according to the different weighting that is inside of the S&P 500. And so it's not a perfect match. But that being said, it's a great way for you to get into an investment that tracks the S&P 500 without the minimum. Once you get the minimum, I believe that it's best for you to switch over and start investing into the S&P 500 index. There is a reason why investing into the S&P 500 index can be extremely powerful. And so don't take my word for it. Here is what Warren Buffett has to say about S&P 500 index fund investing.
I think it's the same thing that makes most sense practically all of the time. And that is to consistently buy an S&P 500 low-cost index fund. Keep buying it through thick and thin, and especially through thin, because the temptation gets, when you see bad headlines in newspapers, maybe to say, well, maybe I should skip a year or something. Just keep buying it. American business is going to do fine over time. So you know the investment universe is going to do very well. The Dow Jones Industrial Average went from 66 to 11,497 in one century. And then since that century has ended, it's more or less doubled again. American business is going to do well. The trick is not to pick the right company. It's to be, because most people aren't equipped to do that, and plenty of times I make mistakes on that. The trick is to essentially buy all the big companies through the S&P 500, and to do it consistently, and to do it in a very, very low-cost way, because costs really matter in investments. If returns are going to be 7 or 8% and you are paying 1% for fees, that makes an enormous difference in how much money you have on retirement.
At the annual meeting for Berkshire Hathaway this year, you introduced a special guest to the audience of 40,000 shareholders who were watching. It was Jack Bogle. Why did you want to recognize Jack Bogle?
I think Jack Bogle has done more for American investors than any other person connected with Wall Street or the investment process, because he, with a number of other people, he came up with the idea of the index fund. He wasn't the sole thinker behind it, but he was the guy that implemented it and crusaded for it. But now there's trillions of dollars in low-cost index funds. Those people are going to have better lives. They're going to have better retirements. Their kids are going to inherit more money because of Jack Bogle and his efforts.
So Warren Buffett says that we need to buy when the market is up. We need to buy when the market is down. Most of us are not equipped to choose individual stocks and beat the stock market, and that we need to ensure that we minimize the amount of fees that we pay when it comes to investing our money. At this point, what I'm going to do is I'm going to show you a couple of the options that there are out there as far as what tickers you use to purchase the S&P 500 index fund. And then what I'm going to do is I'm going to show you how to open an account, how to make the trade, and how to complete the whole process A to Z as far as purchasing the one that I feel like has the best features. So here is a list of the different brokerages, the minimums they require, and the fees that they charge in order to get into the S&P 500 index fund. I'm going to leave this on the screen for a second just in case you need it. As of the recording of this video, Fidelity actually removed their minimum required to invest into their version of the S&P 500 index that they have, and they also have the lowest fee. And so what I'm going to do is help you set up an account with them. Very first thing that you need to do is go to fidelity.com, and on their website or on that mobile app, the process is the same either way. And you click on open an account here. At this point, what you need to do is figure out if you're going to be investing into a Roth account or a traditional account here. And so when it comes to that, I'm going to leave that research up to you guys. There are plenty of videos out on the internet on which one, whether it's Roth or traditional. So pick whichever one works best for you, Roth or traditional, and open the account. It'll then walk you through a bunch of different steps that are straightforward for you to connect your bank account and how to get started with the whole process. This holds your hand through the whole process of setting up the account from here on out. So I'm going to let you finish that, and I'm going to take you over to the screen where you buy the S&P 500 index fund now. At this point, you've set up your account, and it'll take you to this main landing page where you could come in and make trades, view your account positions, trades, activities, orders, transfers, things like that. But at this point, what we're looking to do is purchase the S&P 500 index fund. And so what you do is you come into trade, you click trade, and it'll bring you to this page. At this point, what you do is you open up the account, or you choose the account which you would like to invest into, and then you click go. First things first, what you do is you come down and you pick mutual funds from this drop down, and then you type in FX AIX. And at this point, it'll give you an option. You click action and you buy, and then you type in the dollar amount that you'd like to invest into the index fund. You click preview order, and it'll walk you through the steps of completing the purchase of your index fund. So to kind of back up a little bit and talk about my experience when it comes to working in the financial planning industry, a lot of people were paying somewhere around 2% for an advisor to help them with their investments. And a good chunk of their portfolio was invested into the S&P 500 index fund. And so that being said, Warren Buffett warns us to be careful with how much we pay in fees. If you're paying an advisor 2%, that essentially cuts down your returns by 2 whole %. And this is something that you can easily do by yourself. And to clarify a couple of things, this is a great entry point of investing. It's a great way for you to establish a strong base and foundation so that as you grow and as you continue to learn more about investing, you can build on top of the different layers of investing that there is. And so if you're the type of person that's worried about investing and isn't sure, or don't feel like you're comfortable enough with investing your money, know that this is a surefire way for you to put your money into the market and invest into the America's top 500 companies, knowing that they're going to give you good long-term results. So if you found any of this information useful or helpful, do me a huge favor and hit that like button, leave a comment, and subscribe. I am looking to put out a lot more content, as I am feeling pretty passionate about this project of building YouTube videos and helping people invest their money in a way that's going to bring them more success, more comfort, and have peace of mind when it comes to finances.